Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
Good morning, Dodge. Looks like Greece is out of the news somewhat, but they still are grabbing some of the headlines. Any updates on Greece then?
Well, good morning. Yes, the updates that I'm hearing now are things are not moving forward smoothly, but the trend is in the right direction. And yes, they are no longer taking the front of the paragraph on the front page, which means that there's more of a emphasis now on what's really happening in terms of commodities, what's happening with the Japanese banks, and what we're seeing is somewhat negative, and we're seeing really a much more of a narrowing in the participation to the upside in our markets, at least. And so one has to be much more cautious now. And this is really no longer dealing with the Greek problem. It's more on economics and geopolitics in general.
With regards to the stagnation of the European economy, you were mentioning that Japanese banks is stepping up to snap up some of the assets with regards to the downsizing of some Western banks. What are your thoughts on this?
Well, it's going to be interesting. We're seeing it not only with European but also U.S. financial institutions. The Japanese banks continue to post record earnings thanks to economic and market improvements in Japan, owing to Abe and what it's beginning to work for them. And so we're seeing a great deal of activity, and we're going to be watching this because you see Mizuho Financial coming in with the RBS deal. You see Mitsubishi coming in with their international operations. You see Sumitomo. You see it across the board with the Japanese giant banks. This is a trend that we suspect is going to continue, and it marks a trend away from the large financial institutions over on this side of the pond and in Europe. So this is going to be important to see how they deal with the mega banking industry and the economics and the attendant circumstances of dealing with multiple areas within the commercial and international and investment banking system. We've done it. We're going the other way. The United States is. So this is a definite trend that we need to watch.
When we talk about some Western companies, particularly like GE, for instance, having to put up a bid to be bought, is this signaling a weakened U.S. economy?
You know, it really is short term. First of all, there is a reason for GE to sell, and it's a legal trend that we're seeing over here. But yes, it is an indication that the strengthening of the U.S. economy may not be as assured as it has been in the past. We were able to grow based on our own growth, but now what is happening in Europe, what's happening on your side, is affecting us as well. And so there's much more of a question. It's not that we're slowing our growth yet, although I think we are. It's more of a question of whether we can continue, because what is happening elsewhere in Europe and in Asia is going to have much more of an impact on our ability to grow independently over here.
Let's take a look into Europe then. UK stocks were slammed last Friday with regards to mining shares hitting hard as commodity prices struggled. Do you think the commodity prices pushing prices high would result in FTSE losing more ground this week?
Yes, and I don't think it's just the FTSE. I think we're going to see commodities in general affecting various markets, Australia, for example, and also the United States. I mean, the two commodities that we're watching, although it is across the board, the two that we're watching are gold and oil or energy related. With regard to gold, there's a staggering 25% of global gold production now is underwater at the price of $1,100 an ounce, and it's probably more when you include taxes and interest costs. So it would make more sense to close down gold mines, but they can't because it's cheaper to keep a gold mine open, so you really have a conundrum as to what the gold miners are going to do. With regard to oil, we've been forcing economic growth since 1981 through the use of falling interest rates. That's no longer going to occur. We think that interest rates are going to start to increase, although you notice that now Janet Yellen has a pile of air cover if she wants to wait. That's for sure. But with regard to oil, we see a further weakening, and it's not. I'm not talking about oil as a commodity and trading in the pits. I'm talking about oil in terms of how it affects economies. Part of the problem is there's a slowdown in wage growth. There's a slowdown in the need for oil. There's really a question as to when the price of oil is going to start to increase, which would have certain economic advantages for the U.S. economy, for example. So right now, the questions that are being asked by that are being brought to the table by commodities are somewhat more negative and cautious than they have been in the past.
The Fed is expected to increase interest rates, making commodity purchasing cost even higher. Do you think that other currencies that is falling against the U.S. would see a diminished growth in terms of economic activity?
Yes, I do. I honestly do, and I think it's going to be one of the real questions that Yellen's going to have to come to grips with if she is going to go down the road that she has very clearly stated. As I said, there's plenty of cover now if she decides not to, and the economic uncertainty in China, the collapsing commodities, the stronger U.S. dollars, which weakens growth, geopolitical issues, they all are there to bring the questions to whether or not we can continue to grow and whether interest rates can actually start to increase over here. Increasing interest rates may be in the best interest of the U.S., but certainly that would be only short-term in nature, and that first increase is really not as important as the trend, and the trend will occur. It's just a matter of when, but right now it probably would be better for Yellen not to start this year.
Final question, Dodge. Now that the mining companies are taking a hit, do you think it's a good time to go in and bet on these companies?
No, definitely not. When you look at gold, the short and long term remains bearish. If the near-term positive signal that's being flashed, if we can close now above 1102 on the July basis for gold contract, then we would expect an oversold rally. And that would get us into the supply overhead at 1135, 1145. But if we break that 1078 level, then I think there's more of a move to the downside. But right now, there's really no compelling reason to be a long-term buyer of gold. And in fact, what we're seeing right now, you're seeing hedge funds are holding their first ever gold net short position. First ever since the data was began in 2006. So no, I really don't see any kind of reason to be long gold.
Right, thank you very much. That was Dodge O. Dorland, Chairman and Chief Investment Officer of Landor and Fuest Capital Managers in New York City.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, 1 subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6.